This is Linda Hitt. We're continuing our discussion of the accounting cycle problem. We're going to look at the output in this clip, the financial reports that come at the end of the period. They answer many different questions. Your investors might want to know how much earnings you've made for the period. Creditors might want to know what types of resources are available to pay back loans, and also who else this company has as creditors. And certainly cash flow is a concern for all. Statements should be done at least annually. They may be done for shorter periods of time as well. Two particular statements are for one particular period, which could be a month, quarter, 6 months, or a year. The income statement is all about how the company is doing on a day-to-day basis. Services performed, products sold will be our revenues earned, and then the cost of doing business, we'll look at expenses like rent and insurance. These statements hopefully serve all purposes. They're dictated by generally accepted accounting principles, so we know what's supposed to go on each statement. We do prepare them from the adjusted trial balance that we saw in a previous video clip, and the information is past tense. It's things that have already happened that affects the accounting equation. Cash flow is a different format for the statement because it's broken up into three parts. The operating is the day-to-day cash in and cash out from running the business. Investing is more about cash in or cash out from purchasing assets that are often long-term and expensive, as well as cash in when you sell them. And your financing is ways of raising money other than operating, which would include raising money from new owners, raising money from creditors, and so forth. This particular statement, we cannot just look at the adjusted trial because all we see is an ending cash balance. So we'll have to look at other sources of information, such as the journal entries or a cash ledger. And sometimes we can also do it by looking at an income statement and the change in balances from last year's balance sheet to this year. Okay, next we're going to look at the balance sheet, which is at one specific point in time. So December 31st, 5 o'clock, or January 31st, 5 o'clock. And so these are this is the accounting equation. The resources that we own are listed as our assets. It shows also the creditors, amount that we owe to the creditors, which is our liabilities, and then of course the owner's accounts, stockholders' equity. Again, it's past tense. This is things have already happened that we've recorded in the journals that are now showing up as having an impact on the balance sheet. And we will take a look at the adjusted trial to get the information for this. So now let's take a look at our problem again that we looked at before. Here's the adjusted trial, and I actually have trial balance, but this is the adjusted trial balance. So let me add that on there. It was after we did journal entries for adjustments, and we're going to start with the income statement. And notice if you organized your trial balance in the way we talked about, you can make it easier to do the statements because we've clustered assets together in liabilities, stockholders' equity, and then the temporary accounts or retained earnings accounts are at the bottom, and so it'll just make it easier for the statements. So the income statement, as you remember, has to do with revenues. We may have many categories, and I'm going to use the middle column. You can really prepare it in one column, all the numbers, or you can use 2 or 3 columns. It doesn't really matter. The columns do not mean debit and credit. Financial reports are going to individuals who know nothing about basic bookkeeping. So it's more make it look pretty, do it so you can do the math and show the totals. So I'm going to throw the totals to the right in the far column. Revenues, as we can see, is 6383, so I'm going to list those. Normally we'd have more than one category, but to keep the problem short, I just listed that. So we're just going to pretend we have other things to add to, and we'll do a total. Then we can do a heading for expenses, and we can list the individual expenses. So we have salaries for $1,800. We have insurance for $100. Whoops. And supplies. So thankfully we have software to do this, but it's still, I think, useful to do it by hand to understand what software does. and then interest. At this point, the order doesn't matter. Later, we'll look at the formatting. And then finally, rent. Dividends, though it feels like it maybe should go on the statement, does not. Rewarding the owners is not about the day-to-day running of the business. So we leave that off. I can't type today either. Okay, so then we want to add up our expenses. I'll move this over, maybe. Okay, so we have a few numbers to add. So it looks like 3,010, so I'll put that in as a total. And then we can do net income or net loss. Looks like we have a net income. Good news. Or net earnings. So we will do the math for that as well. Revenues minus expenses. 3373, and we'll hope for the best there, that that's correct. Okay, so that's your income statement. We can go on to the balance sheet, which we know is nothing more than the accounting equation written vertically. So again, don't worry about the order, just list them. So we have cash. I'll use the middle column. And all this, of course, is ending balances. Prepaid insurance. Accounts receivable. And so forth. Okay, not too many assets. And land. Okay, and then we'd want a total for the assets. So we've got our calculator again and add those up. Hopefully doing the math carefully enough so we can actually balance the balance sheet. That would be a good feeling. 17,009. That's what I've got. Hopefully that's okay. And then we can go on to liabilities. I'll slide this up a little bit. I can have that as a heading. And we have notes payable. Sorry. 2,000, and we paid off accounts payable, so it's not listed. Unearned revenue. It's another liability, short-term one. Salaries payable, what we owe our employees. Okay. Interest payable. And that's 10. Okay, and that looks like it for the liabilities if I've looked at them correctly. So then we can do our total and use our calculator, I think. So we add the four numbers up and hope this is right. Okay, 4927. And again, if it's not the worst thing that can happen. And then finally, stockholders' equity. And here we have common stock. And that's 10,000. And retained earnings. If you look at retained earnings, we've got 0. Okay, something's definitely wrong there because we do have a profit of 3,373, and we also have dividends, and those are retained earnings accounts. So what you have to remember, we have not closed the books yet. We have not updated retained earnings for the changes that we've made in revenues, expenses, and dividends. So we're going to have to calculate that. So the beginning balance is 0. Those are brand new company. Oops, I'm going to use the proper 0. And we're going to add the net income. So we did the income statement first, so we'd have that information. And then we're going to subtract the dividends. And if you look over here, dividends are $400. So minus dividends of $400. And then go ahead and do the math. So I can do better with the numbers than I do with the letters. So 3373. Subtract 400, we've got 2973. So don't forget you need to do that step. Okay, and then we can go on to a total. for stockholders' equity. And I think I can do that one in my head, maybe. 12,973. And then to balance the balance sheet, we add the right side of the equation items together to prove that it equals the left side, hopefully. And if it doesn't, again, don't spend too much time, don't worry about it, because software helps us with this, thankfully. So we've got 4927 and 12,973. 17,900. Okay, so I'm lucky that it came out that way. It's a good feeling when it balances, but not a problem, I guess, if it doesn't. Just check it out for a few minutes and go on if it doesn't balance. Okay, so we have two of the statements completed, and then we mentioned for cash flow, we have an ending cash balance. Okay, that's not going to give us detail to do the cash flow statement. So we're actually going to go back to the journals and analyze those for a minute before we start the cash flow statement. So you remember, we need operating, we need investing, and we need financing. Those are the three sections that we want to pick up. So let's do O for operating, I for investing, and F for financing. Let's go through the journal entries first. We can write it under the date. So cash and common stock. Cash coming in from that as a way of financing the business with new owners. So I'm going to put F to help us label. Paying for rent is certainly part of the day-to-day running the business. So I'm going to put O for operations. Prepaid insurance, if I paid it monthly, it'd be insurance expense. Cash paid for all expenses is operating. Just because you prepay it doesn't mean that it's going to be different. So that's going to also be operating. Even though it's an asset, it's a short-term asset, and we could have done it monthly. Cash raised from creditors, notes payable is another way of financing your business. Purchasing land does fit with investing, buying different types of assets other than prepaid insurance. And then we have two entries with no cash flow, accounts payable, accounts receivable. Now we're down to paying accounts payable. The accounts payable was set up because of supplies. Supplies is kind of like the prepaid insurance. It's a short-term asset, relatively inexpensive, used up quickly in the day-to-day stuff, so we're going to make that operating. Those are the few exceptions for assets going into operating. Most of the assets we purchase will be investing. Salaries, employees, that's certainly part of the day-to-day running the business, so we're going to put operating for that. Collecting cash on accounts receivable is customers, clearly operating. Cash from service revenue, customers again. Cash paid for dividends. This one is going to actually be under financing, probably because cash from common stock and owners is under financing, so rewarding owners is also put there as return to the owners. And then we have cash and unearned. Once again, it's customers, so that's going to be operating. And the good news is when you get to the adjusting entries, there is no cash flow, so you don't have to worry about those for the cash flow statement. So let's come up here to the operating, and let's see if we can put all the customer stuff together. And just call it customers rather than cash from accounts receivable, cash from unearned, and so forth. So if you look at the cash coming in from operating, let's see, got to go a little ways down. Here's the first one is actually all the way down here. Cash from accounts receivable, $1,500. So I'm going to put $1,500 as a cash inflow. AR for accounts receivable, so that's partly from customers, or that is from customers. Cash from service revenue, it's another way of getting cash immediately when you do a service. So I'm going to put the 4,000, whoops, not there, 4,000 here and just put revenue. And then we're going to do, see if there's anything else. Okay, cash from unearned revenue, 2,000. So I'm going to put in the 2,000 and put in unearned. So then I'm going to use the middle column and we're going to add those up. So 1,500, let's see, 4,000 and 2,000. 7,500 is all cash coming in from customers, so it's a positive number for inflows. And then we're going to list the cash out for operations. We're going to try to show the detail so that we have more information given. We have cash for insurance, so you can just type insurance. And that's going to be an outflow, so I'm going to show it. It's a dash, negative, or in parentheses, your choice. And then we have, let's see, cash paid for supplies. When we paid for accounts payable, that was paying for supplies. So that's minus 500. And we have, yeah, some that don't involve cash. Salaries is $800. Not supplies, salaries. Okay, minus 800. And what else? Dividends. Okay, that might be it, or I may have missed something. So we don't have rent for 700. That's what I skipped over. So the order really doesn't matter, which is the good news. And I'll stick in the 700, and I think at that point we may have it for the operating section. So once you get that done, you can put your total, and we can throw it over there. I'm going to put it over to the right, and then we'll simply add it up. So positive 7,500 minus the other numbers. So it's important, again, you do show the negatives. And we'll hope for the best. So I've got 4,300 as my total. It's a positive number, so it's an inflow. Then we can go on to investing. We purchased a piece of land. There it is. So we have land. We can be very short to the point. It's going to be minus $5,000 because it's a cash outflow. I think it's 5. And then just because you might have other items, I'm just going to go ahead and total it, even though we don't really need to. That's an outflow. And now we're down to the F's. We have several F's. One of them is from cash and common stock for $10,000. So I can put common stock. It's an inflow, positive $10,000. Next, I have cash and notes payable for $2,000. So I can put inflow of 2. Of course, I was paying back the loan. I'd have an outflow. And what else do we have? Looks like we're down to dividends. So we reward the owners $400. So I'll type in the dividends. That's going to be minus 400. Okay, we can double check. I think we may have all the financing items. Okay, we'll find out in a minute if it doesn't tie back to the cash. So we'll do the calculation. So I've got 10,000 plus 2,000 minus 400. Nope, I don't think that's right. I think I made a mistake when I did this, so let's do this again. Yeah, we got 12,000 inflows minus 400. Okay, 11,006. That sounds a little better. Okay, then we're gonna do the net change in cash, and then we'll check and see if it in fact agrees with what we're showing on my trial balance. Okay, here we can do 4,300 minus 5,000 plus 11,600, and we've got 10,009. Now that number sounds familiar, which is good news. So at the very end of this, to double check our work, we're going to say plus beginning cash balance. Okay, which because we're brand new is a 0 balance. So if we add the beginning balance to the net change in cash, it should equal the ending cash balance. If I add those two together, that gives me 10,009. And if we go back to the trial balance, of course, you'll see that cash is 10,009. Now, if there were something other than a 0 beginning balance, we'd have to compare the balances to get that total. So that looks good. So I think we've finished the financial statements. On the next video clip, we will do the closing entries, which is the very last step in the accounting cycle.